Welcome back to the Morning Bell here on Trading Tuesday, 2nd of October 2012. My name is Raj Arya, together with Martin Wong, editor of TradersTruthReveal.com. Right, now this is a segment all you viewers will want to stick around because we're going to go through all the various industries to see what are the stocks we should be looking at in terms to make a nice little profit in this final quarter. So, right, okay, Martin, let's start off with the first industry, which is automotive. Now, as we have seen from the budget, there was absolutely no news announced with regards to this industry.
That's correct. I think all this may be covered under the national automotive policies. And like it or not, I mean, the governments this time have to have the very populist budget. Okay, and the only way to get a populist comment from people is the lowering of excise tax. But don't forget, the government also need revenue. So nothing has been announced. So which is what we expected. This will probably be covered under NAP.
Yeah, the NAP apparently is going to be out very, very soon. I think there's a few issues they need to address there. For example, the import taxes, the incentives for the hybrid cars, the industry, the AP issue, and of course the knock-on effect with regards to the used car dealers and so forth.
That's right.
So, all right, if you had to make a stock pick from this industry, which would catch your fancy?
Actually, I fancy UMW, which is the franchisor for Toyota. For start, I think then I will move on to perhaps maybe Tanchong. I prefer Nissan Tanchong, producer Nissan. These cars to me tend to stand out from the crowd in terms of they may not be cheap at this point, so investors need to do their homework for that matter.
Right, right. So you heard it here, UMW and Tanchong. So start adding those to your favorite list of stocks on Bursa Malaysia. For information, the rating for this industry is currently neutral for the time being. So it's a wait and see, probably in anticipation of the NAP. All right, let's look at aviation, something which we have talked a great deal about over the months here on the Morning Bell. Of course, the two major players would be AirAsia and Mars. What's your take on the aviation industry?
Now, aviation, there is some incentive which is coming out from the Visit Malaysia year 2013-2014. Now, remember, a lot of the AirAsia performance depend more on the fluctuation of the oil. In this case, we're talking about aviation oil. That actually drives the margin and will affect the so-called aviation. So again, in Malaysia, there's only one or two airlines. We talk about AirAsia or MAS. So these are the two picks. If you have to take two picks, it's very obvious, right? Yeah. So I'll leave that to the audience.
Yeah, let them decide, which is quite obvious in that sense. But if, let's say, hypothetically, we have to look at from a regional level, would there be a particular favorite of yours?
In particular favorite, I would actually look at SIA. Singapore, they're one of the best run airlines in the region, and they do pay a decent dividend too. However, from a longer perspective, from an individual, I would actually avoid investor to actually stay out from the aviation for the time being.
That's right. And we also have the news with regards to Malindo Airways, which is a joint venture between Line PT from Indonesia and Nadi from Malaysia, which should be coming on board. I mean, they're going to start flights as early as next year. So that's greater competition for AirAsia, given it's a low-cost carrier as well.
It is. That is why, if you look from an investing standpoint, the airline or the aviation sector is one of the most cutthroat and competitive. Yep. Now, anybody can come in. I'm saying anybody, or I'm saying about the region. You got the Scoot airline, I think, from Singapore.
That's right.
So they can actually come in. They'll just need to get the landing rights. That's about it. Once they come in, they'll take away market shares from it. So, as a rule of thumb, you want to be investing in companies which have a monopoly. In this case, AirAsia may not hold on to that monopoly of the Malaysian airspace for very long.
Right. Okay. So they have it. Aviation, it has also a neutral rating to it. Next, moving on to banking. As they say, the proxy of any economy. So what's your take on the banking industry?
Whatever since been mentioned from the budget, there's not much reaction to the banking stock. Now, banking stock Malaysia has to seen from will be affected actually from the property. Remember, bank loans, consumer loans, housing loans. So that's going to take a cue from the property sector. If the property sector has a pickup, then banking sector will have a pickup too, because that actually runs on the overall economy. Now remember, Malaysian economy is pretty much insulated in that sense. We don't have a lot of our budget or debt exposed to the euro or US. So that itself, plays a very safe haven for Malaysian investors.
Right. What about those banks which are on a aggressive acquisition trail? For example, Maybank, and to a greater extent, CIMB.
Yes, exactly. Now you may notice CIMB banks are actually extending beyond the shore in here, going to as far as Australia, Indonesia. So that is going to cause a lot of volatility in there. So that's what I caution people: when you invest, you are investing in countries like that, per se, so look at the revenue that is generated by the company. So that was, if the country that they're going in, like in Australia, for this example, will do well, then that sector will do well too.
Like some banks are doing really, really well in terms of diversifying its income stream. For example, moving from interest income to non-interest income. For example, CIMB, they're quite strong on advisory, investment banking side, where you earn a more fixed income stream, in that sense, less exposed to the volatility in the interest rates as well as the loan regime imposed by Bank Negara.
Generally, the traditional market for banking has been, the loans one, but they're also moving into investment banking side, like what you just said, advisory. As long as Malaysia now seems to be the center of the world, a lot of M&A and IPO, I think particularly banks like CIMB banks will tend to do well. But again, I'm not a big fan of financial stocks. I tend to avoid it. And perhaps when we talk about my favorite sector, which is the consumer sector, that's where I like to talk more about it.
If you had to pick a banking stock, what would it be?
At this junction, I would say, if I have to pick it, maybe Maybank.
Maybank, eh? What about Public Bank, which has a very radical approach? They don't believe in aggressive acquisition, but it stays true to its focus in terms of loans and growing locally.
Public Bank has been very traditional, very conservative, and with that's like taking a slow boat. However, if you want a fast boat, right, and then Maybank would definitely be one. But for my own personal investing, right, I would choose Public Bank.
Okay, there you have it. So if you want a little bit of excitement with the potential growth and taking a little bit more risk, Maybank is the way to go. And we all know banking stocks, banking industry is also a neutral. We seem to be having a lot of neutral ratings on the industry so far. Okay, now moving on to brewery. Like for those who want a good time, brewery has been doing very well. In fact, they have a positive ranking to the brewery industry. Can you elaborate?
If you look at not only brewery in Malaysia, if you look at some of the brewery all over the world, even in US, Australia, they tend to do very well in this non-growth environment. Okay, because we are looking at projection of the Western country, they're all growing less than 2% GDP. So what they're looking for is probably growth in domestic demands. And like good time, bad time, people still need to drink. And the same also goes for Malaysia. In here, I'm bullish on consumer sectors, especially those brewery who pays good dividend. And in Malaysia, you only have probably two, Carlsberg and GAB. If you notice, prior to the budget, there's a lot of speculations. There may be a tax, if I'm not mistaken, because there's no excise tax on the brewery for the last 7 straight years.
That's a long time.
Maybe it's a long time. Now bear in mind that the brewery tax in Malaysia is one of the highest in the
I heard
world.
it's the second highest in the world after Norway. So I guess there's logic why it hasn't been increased for the last 7 years. It's already so high.
Yeah, and I think it's also good too. That's the way, if this is drinking a lot, it's actually a sin. So that's what they call it, the sin tax.
Fair enough. All right. Okay, brewery is a positive there. If you had to pick between GAB and Carlsberg, or you're indifferent to either of them?
I'm indifferent to either of them.
Indifferent. All right. Next, moving on. The people, the movers behind the Malaysian economy, the construction industry. What are your take, given the fact we have all this infrastructure, LRT, MRT, GTP, ETP?
Now remember, if you look at it, ETP, that will be positive and for the construction sector. But when ETP was launched, so all those already been priced into construction. I think what's new from here are the rural infrastructures. So depending on companies, you really have to do your homework and dig in. If some of these are actually involved in rural area, I believe if the rural will be in Sabah and Sarawak.
That's right.
So there's some Sabah and Sarawak county you can look at. I believe it's CMS.
CMSB, that's right.
CMS can look at it, but again, you have to do your homework. And what I've said here, these are not recommendation to buy and sell. Let me just clarify to you. This is just studies. You want to be looking into it and see if there's any potential to it. Okay?
All right. So construction is a neutral, but you can look at those stocks which have greater exposure to infrastructure projects in Sabah and Sarawak. Okay, moving on. Consumer, your favorite.
Yes.
Which ironically has a negative rating.
Now, consumer in here, we have a irony rating is because there is going to be a cut in sugar. Okay, sugar subsidy. All right, I think we're talking about here that the retail sugar price will rise by 20 cents per kilo,
That's
effective 29th of September this year. So the big sugar king in Malaysia are Tradewinds and MSM. Now remember, these two companies are actually also exposed to the volatility of the sugar market. Now there has been said about there has been a glut in the sugar prices, and it will take a tumble. Again, like it or not, the world population is growing, and so is Malaysia population is growing. Whatever the volatility that we see, there will still be more people consuming.
Right.
Like it or not, I mean, a lot of things has been said about health-wise, but as the country becoming more nationalized, more westernized,
right,
and becoming more developed, the consumption of sugar will be more. That's why you're seeing more and more people in the street are more obesity. They've been
diabetes as
diabetics,
well.
exactly. Right. So those will actually increase the medical costs.
Right. Okay, so there's something to look at where you have to shift away to a much more healthier lifestyle for your own good as well. If you had to pick a consumer stock on a general basis, what would it be?
Actually, the consumer stock you have to pick, I would actually pick companies that are able to raise prices for inflation will be Nestle, BAT.
Right.
Sorry, not BAT, BAT is a tobacco stock.
Yeah.
Consumer,
Amway?
Nestle, Amway, those which is involved with the brand name. And another one would be, actually, I kind of like it, is Encar. We actually manufacture OEM products for all the MLM companies.
Right. So, okay, there you have it. A few defensive stocks, good dividends, I'm sure steady in good times and in bad times. All right, moving on to gaming. What do you think of gaming? No taxes imposed as well?
No taxes imposed. Now remember, gaming in here, we're referring to the Genting Resort World that we've seen. I've never been a big favor of gaming stocks, as let's say. Reason why it's the same thing, and especially for the Genting Resort World, we are seeing a lot of competition coming in.
Right.
Now, however, for the number forecasting, which is the 4-digit one, that is a different scenario altogether. So on a pure gaming side, Resort World, to me has been, was it a negative here?
Yep, gaming is a neutral actually.
It's a neutral because and it hasn't been any talk to raise the taxes in here. But remember, as more and more countries are desperate for revenue, I think even countries like Taiwan are talking about starting up a casino.
Right. Okay. So there you have it. Malaysia right now, Genting is facing a lot of challenges. Competition from as close as Singapore, now Taiwan. Macau is without saying. Okay, if you had to pick a stock, let's say if it's from the number forecasting one, what would it be?
If you have to take a pick one, I have said again, look at the good dividend payout, and I believe BJ Toto did pay a good
Berjaya
dividend.
Toto, that's right. Okay, next moving on to Plantation, which is neutral. Looks like there's no change to the tax structure for the palm oil.
Yes. Now, if you notice the recent fall that we've been seeing on the crude palm oil has been very, very hurting the margins of a lot of the plantation companies. Now, there are talks that plantation may fall as low as maybe 2,000.
Wow.
2,000 now? What's the price now?
Now it's close to 3,000, isn't it?
No, it's below. It's gone below. It's about 2,005. I'm not sure. I think I last saw it's about 2,800 in there. There's been a glut of crude palm oil in there. So, and remember, a lot of the forecast has been very, very good. The yield has been good. So there's a lot of supply in the market, and also we're seeing falling prices.
All right.
That we're seeing in Europe with this. Soya bean. So that has caused us the plantation stock.
Okay, we're down to our last three industries. We're running out of time. So very quickly on properties, it's a negative.
Now, property has been negative because the LGBT tax has been increased. But like it or not, that 5%, it's very, very small.
Negligible,
It's very negligible. What it does tell investor and also the public in the community that more taxes are coming.
All right. Which property stock?
Property stock, again, I'm not really a big favorable British property stock. If I have to put it, maybe in this case, and I don't like it, will be SB Setia, for your sake.
All right, SB Setia, for me. All right, keep that in mind. Okay, telcos right now, which has a positive rent.
Yeah, telco,
rating.
there's definitely a lot of good telcos company, which is a good rating. DG, Maxis,
That's right.
and Axiata.
If you had to pick one? Maxis.
DG.
DG, all right, interesting. Okay, DG, we have to keep that in mind. And finally, tobacco.
Oh, tobacco has
Positive
always
as well.
been, yeah, tobacco has always been a favorite. I've been buying this a lot for my clients as well, and this is good. JTI and BAT.
And if you had to pick one?
I prefer JTI.
JTI. Okay, there you have it here. We have covered all the major industries, their positive ratings, neutral, as well as negative. So I hope you have written it all down, or if you have not caught all of it, you can always catch the repeat of the Morning Bell. We're going to take a short break right now, and after this, we're going to talk a little bit about gold trading in Malaysia, or is that a scheme cepat kaya? Stay tuned to find out right after this.